Former Merrill Lynch head North American economist David Rosenberg has been warning investors for almost a year that the Fed is serious about its fight against inflation and that they should take it seriously. Dave predicted that the Fed would stop and possibly even make cuts in 2023, but that the S&P might fall another 30% from current levels. According to David, the S&P will bottom out around 2,900 and equities will start to look appealing once more in 2024. At this point, Rosenberg added, stocks will look attractive again, but that's a story for 2024. So if you're in the bear camp, one way to hedge against your portfolio is to buy the ProShares Short S&P 500 ETF ticker symbol SH. And what that does, it's inversely correlated to the S&P 500. So if the S&P 500 declines 1%, the SH ETF should rise by 1%. So just to give you an example, this is the monthly chart, and we're going to go back to the Great Recession. So back during the Great Recession, when the equity markets declined, I don't know if it was 50%, I don't remember, but the SH went up almost 100%. Now it's been in a steady decline because we've been in this tremendous 10 plus year bull market. However, if David Rosenberg is correct and the S&P declines 30%, the SH should increase 30%. Now you won't make a ton of money, but you won't lose a ton of money. So SH is trading at 1542 right now. A double would be 100% would be $30. Let's just go to the weekly chart. So a double from current prices would be $30. So 30% would be roughly, say, $20 from the current price. So instead of losing money if the markets do decline, you'll be hedging and gaining while the rest of retail investors are losing. Until next time.